So the fear of inflation is on our heads, but Bank of Canada brushes off all those fears saying this is going to be transitory, temporary, you don't have to worry about it. It's going to go back to the target level later on. But is it going to go down or is it going to continue going up? And if it's going to go up, what's next? What is up YouTube? What is up Canada? Thanks for joining in. As you know, the purpose of this channel is to educate my audience about the Canadian real estate market with particular focus in Toronto GTA and some of the macroeconomic factors that has an impact on the real estate market. Now this morning we got some fresh figures from Stats Canada about the inflation. As per the month of May, the inflation jumped to 3.6, which is much higher than what we saw in April, 3.4. Now, Bank of Canada is saying you don't have to worry about it because of the base year effect. Now, for those of you who don't understand the way inflation works is they calculate based upon a KPI called CPI, which is Consumer Price Index. And they collect some of the common consumer goods and services and average their price out and compare to the previous year to see whether the prices are going up or not. If the prices are going up, that means the inflation is higher than normal and is going to affect the consumer buying power. Now, what Bank of Canada is saying that it's because of the base year effect, and the base year means last year some of the consumer good prices went down significantly, like fuel prices. If you compare from the last year abrupt sudden change, of course the number is going to be skewed a little bit. If we take this as an argument and accept this as an argument from Bank of Canada, but if you compare the month over month figure, last month when we saw the numbers came out for the month of April, it is still going up. And it is the highest in the last 10 years. So in my opinion, the inflation is going to stay here for some time. The way government calculates it, it's a little bit misleading because when it comes to shelter or housing, they only calculate the amount of rent or the amount of mortgage a consumer is paying. Now, we saw the real estate market has gone bonkers in the last year, and the average housing price gone up 40% across GTA and in the suburbs. How come the shelter cost is 4% up as per CPI, which is very misleading? And the reason is because they only consider rent or the mortgage payment. Both of these things are not going up in last year, right? Because we have a rent freeze in Ontario because of lowest interest rate. The amount of monthly mortgage payment is not going up, even though you are taking more debt. But as per the monthly outgoing payment, it's not going up. So it's not affecting CPI. If you look at the Canadian real estate market, it's overly inflated. In my opinion, I think the inflation is much higher than that, especially the real inflation, because the way CPI works, it varies from person to person. If I ask myself, the stuff that I buy in my daily life, I think it has gone up significantly from last year. So to me, inflation is much higher than that. For you, if you are buying some other stuff that is part of your daily routine, and if you see the price has gone up from last year, that's inflation for you. So in my opinion, the inflation is going to go up or significantly higher, and Bank of Canada is basically outplaying it. But one thing I would like to tell you guys is you need to understand, if you have cash sitting in your account, in your saving accounts or in your checking accounts, please invest that cash into something, because sitting cash is getting devalued because of higher inflation. It's going to reduce your buying power year after year after year if you keep that cash sitting in your bank account. So please take wise decision, invest into something. I don't care, real estate or something else, but do not just sit on the cash. So this graph showing the comparison between Canada and US. So you can see the US inflation in US has gone significantly higher than Canada, almost 5, and Canada is kind of catching up. Right now it's 3.6 as per CPI, but as you know that real inflation is much higher than that. This graph is showing the cost of living. Now they're only considering the renovation cost and basically furniture cost and stuff like this. Even then, it's showing a sharp increase, you can see. But again, the real estate cost is not covered under CPI, so don't be misled by that. The other graph I'm going to show here is this shows the breakdown of the consumer buckets that they consider in order to calculate CPI, and you can see the transportation has been the outlier, and this is because the shortage of semiconductors in the supply chain which is causing anything that is utilizing semiconductors in their products is having issues with regards to supply chain. Cars have got a lot of ICs built into it. My laptop has been due for a refresh. I'm not getting it because of silicon and semiconductor shortage. So automobile industry has been significantly impacted because of shortage of semiconductors. That's why used car sale has gone up crazy. And this is basically one of the major reasons why the CPI was much higher. But then my point is, guys, the inflation is here to stay, I think, for some time, and I think it's going to continue until Bank of Canada takes some decisions to start raising the interest rate up. That's how they control the inflation at the end. But I think they will let the inflation go higher because they would like to see how the economy performs in the later months, because now we are coming out of lockdown. So they need to see how the economy performs when people start moving across and then opening up the businesses. It will be interesting to see what's going to happen next. Just wanted to share with you this news. As I said, take care of your cash, make your wise decisions, and invest into something that is tangible, will give you return on your investment in the later phase. Until my next video, take care.